Hello everyone, this is CJ with Cyclotron. Have you figured out yet that Blackrock has ruined traditional capitalism in order to generate more power and influence for themselves? I recently posted a video critical of Harley Davidson's corporate ESG agenda. Since I posted that video, I've done an extensive amount of additional research and realized, as some of you have commented, that Harley's ESG agenda is really being dictated by much larger forces. As a reminder, ESG stands for Environmental, Social, and Governance Agenda, and often DEI, Diversity, Equity, and Inclusion, is part of the mix. These ratings and company goals are being promoted by the large investment banking companies, and there is a growing backlash against this entire agenda. Now, in every good story, there needs to be a villain, and the villain in this story is Larry Fink, CEO of Blackrock. This video will be a relatively deep dive, so please stay with me as I tie it all together for you. I will talk about Harley Davidson in this video because I've studied their operations for several years now, but unfortunately they're just one of many U.S. corporations stating their planned conformance to the ESG agenda. In this video, I'll provide an overview of why investment banking entities such as Blackrock, Vanguard, and Statestreet started the ESG DEI agenda, what a lot of people refer to as the woke agenda, and how this has resulted in wholesale destruction of how our capitalist system used to operate. I'll also cover some of the efforts that state governments and other entities are doing to combat the train wreck of the ESG DEI agenda. For this video, I found a great deal of good source information from this online article titled Blackrock's Tyrannical ESG Agenda, written by John Masco. I'll put a link to the article in the description for this video. Now, I'm all for society improving the way things are done to provide a more sustainable future for subsequent generations. It's just that I don't like to see the capitalist system being co-opted by a bunch of dictatorial, quasi-governmental corporations such as Blackrock. By judging from some of the comments left on my videos, some of you think that the whole ESG agenda is great and you can't wait for the internal combustion engine to be entirely phased out. So I'm curious, which side of the debate are you on? As I mentioned in my recent video, Harley Davidson has gone woke. I've been critical of Harley Davidson's embrace of the ESG DEI agenda. This is because Harley Davidson's CEO, Jochen Zeitz, actively promotes this agenda. The fact that he's German-born just reinforced in my mind, perhaps unfairly, that Europeans seem much more interested in promoting these concepts and seem to love an excessive amount of government and corporate regulation. Not that the US is that much farther behind at this point. Now, I've come to realize that many of these companies are following the playbook written by BlackRock and other massive investment banking companies. This playbook hides behind what is being represented as UN-sanctioned mandates. So the start of the ESG agenda was a result of what the investment banking community decided to do in the wake of the last big recession in 2008 and the Occupy Wall Street movement. As you will no doubt recall, the federal government had to come to the rescue of many of these big banks and auto manufacturers. Some investment banking institutions went out of business, such as Lehman Brothers. Their assets were acquired by Barclays, who was in turn acquired by BlackRock in 2009. At this time, the remaining institutions were very worried that they would come under a raft of new federal and state regulations that they figured would greatly interfere with their ability to make a lot of money. So to preempt these regulations, ESG was embraced following the UN guidelines that were first suggested in 2004. The idea was that the investment bankers would decide what goals should be set as part of this agenda and would pressure large corporations to adopt these goals. The investment banks would also lay the groundwork by funding various United Nations studies and would later reference these same studies to support their goals of becoming, say, carbon neutral by 2050 or to limit global temperature increases to 1.5 degrees Celsius above pre-industrial levels. In other words, the investment banking community shoved their agenda down the throats of U.S. corporations and in turn the American consumer under the guise of saving the planet from climate change. The initial opportunity for pushing this agenda was provided by the United States Senate, thankfully refusing to ratify the Kyoto climate protocols. In another move that I was happy to see, in June of 2017, then President Trump announced the withdrawal of the United States from the Paris Climate Change Agreement. These agreements would have forced companies and governments to comply with a variety of environmentally related goals, mostly as they related to greenhouse gas emissions. This would put the big investment banking companies in a position of great power and influence by creating what is in essence a new asset class of trading carbon offset credits. The money generated from these credits would be funneled into alternative energy projects handpicked by the investment bankers themselves. To ensure that big corporations would continue to have their stock held by the investment bankers, for example, institutions hold approximately 50% of Harley Davidson stock, people like Larry Fink, CEO of Blackrock, use their influence to ensure that corporate boards of directors are filled with people who espouse the ESG DEI agenda. To facilitate this control, the practice of generating ESG rankings for companies was started. Here's a short video clip of Larry Fink that was recorded at a 2017 New York Times event where he's showing how they flex their power over corporations through this ESG and DEI agenda.
Well, behaviors are going to have to change, and this is one thing we're asking companies. You have to force behaviors, and at Blackrock, we are forcing behaviors.
Now they're pushing the DEI agenda just as much as the ESG agenda.
54% of the incoming class are women. We added 4 more points in terms of diverse employment this year, and what we are doing internally is if you don't achieve these levels of impact, your compensation could be impacted, okay?
Now here's the threat to companies if they don't comply.
You have to force behaviors. And if you don't force behaviors, whether it's gender or race or just any way you want to say the composition of your team, you're going to be impacted.
This is a significant departure from the past roles of the investment bankers and mutual fund owners who used to be just passive investors. Now these investment banking institutions have become activist and are remaking corporate governance at the expense of the individual investor. A big part of this shift occurred back in the 1980s, when fund managers were allowed to vote on corporate board decisions by proxy instead of the individual investor making such decisions. What started out as a tool of convenience was corrupted by the investment banking firms starting in 2010 in order to promote their ESG agenda. And to make matters worse, these investment banking firms have become absolutely massive. At the end of 2022, Blackrock had $8.6 trillion of assets under management. Combining this with the assets controlled by Vanguard and Statestreet, those 3 firms combined had over $20 trillion of assets under management in 2022. Compare that to the 2022 United States GDP of $25 trillion. BlackRock made nearly $5 billion in profit on nearly $18 billion in revenue in 2022 with over 16,000 employees. Remember back in the year 2000 when the federal government sued Microsoft on an antitrust claim? At that time, Microsoft had a total revenue of $9 billion and a profit of just over $2 billion. This is much smaller than BlackRock at this point, yet you hear absolutely no talk of the federal government suing BlackRock for antitrust violations. Going back to the article BlackRock's Tyrannical ESG Agenda, it is noted that in 2020 BlackRock voted on over 16,000 shareholders meetings that covered over 153,000 company proposals. Many of BlackRock's votes were reported to be against the company management. BlackRock then identified 22% of the companies as not making sufficient progress on ESG goals and put another 191 companies on their watch list. BlackRock, through Larry Fink's annual letter to CEOs, sets and updates their ESG and DEI agenda each year. I'll post a link to these recent letters in the description for this video. Fink also stated in 2020 that companies must disclose their so-called climate risk to investors using accounting methods that were created by the investment banking firms themselves. This is why you have companies such as Harley Davidson issuing their annual ISM report, which stands for Inclusive Stakeholder Management. The ISM is the overarching document that lays out a company's environmental and social goals, and the ESG data appendix covers all the details on the company's environmental and social metrics based on the criteria developed by the investment banking industry. So what Larry Fink is saying is that BlackRock will push to have people on the board of directors who are very much part of their agenda. I did a video last year about how Harley Davidson's board of directors that are really a who's who of wokeism. It is of course these boards that elect the CEO of a company, just as Zeitz rose from his board position to become Harley Davidson's CEO in 2020. So now you have these companies such as InBev and others destroying shareholder values and even entire brands attempting to appease the investment bankers. Ironically, the basic premise that ESG investing will yield greater profits is not true at all. In 2022, 8 of BlackRock's 10 ESG funds underperformed relative to the S&P 500. In this clip, Fink seems to acknowledge that things aren't going as well as he'd like to see them.
But I am just as much shocked as Ken is that we have not seen more opportunities, and we're going to have to force change.
Also, many companies are having increasingly poor environmental performance from year to year relative to the ESG criteria. For example, Harley Davidson's CO2 emissions has grown from 1.6 million tons in 2020 to 2.4 million tons in 2022, despite producing a total of 2,000 fewer motorcycles in 2022 as compared with 2020. Keep in mind that the true goal of the ESG agenda is to create an extremely complicated environmental accounting system that tracks the amount of energy and water that's consumed, along with the amount of CO2 that is generated to produce a product all along the supply chain through its end use. The goal after such accounting is to ultimately reach net zero carbon emission. That is, these companies can still generate all the CO2 that they want as long as they ultimately identify how many carbon offsets would have to be purchased to equal the amount of CO2 being generated, hence the term net zero. Currently, the offset credit market is still being developed, but it is of highly questionable validity. For example, some groups are able to sell carbon offset credits by promising to not cut down trees on land that they control. Often they're public lands where the trees wouldn't be cut down anyway. Many people have referred to such offset credits as scams. Another term that you may hear about this is the term greenwashing, which is something that creates the impression that there is a benefit to the environment when there really is not. You may have purchased airline tickets online and was provided an option to pay an extra fee to offset your carbon emissions. Rental car companies are offering the same thing these days. But the benefit such so-called carbon offsets have is very uncertain, besides perhaps making the purchasers feel better about the trip that generates a lot of CO2. But what benefit such so-called carbon offsets have is very uncertain, besides perhaps making the purchasers feel better about taking a trip that generates a lot of carbon dioxide. What is currently very unclear is how companies such as Harley Davidson will get to net zero when the bulk of CO2 emissions are from what is Scope 3 sources. These are sources that are not generated from factors that are directly controlled by the manufacturer. For example, in 2022, Harley Davidson computed their total CO2 emissions at 2.4 million tons, where 2.1 million tons came from Scope 3 sources, that is, the end user. So how could a company like Harley Davidson get to net zero carbon emissions if the vast majority of those emissions come from the use of their motorcycles? It is possible that they're counting on somebody else to deal with this issue, but they're certainly doing their part to help develop the market for carbon offsets. There's also the whole system of assigning ESG rankings, which are done differently and on a proprietary basis by various investment banking groups. There may be different ESG scores for the same company depending on who's compiling the ratings. Now, there are some ESG rankings that are posted online by Sustainalytics. In their system, the lower the ESG rating, the lower the risk according to this agenda. I was rather surprised to see that Harley Davidson had a very favorable score of 15 as considered to be low risk relative to ESG issues. GM and Tesla have rankings in the mid-20s and are considered to be moderate risk. Archer Daniels Midland, who is a huge grain supplier and ethanol fuel producer, is rated a high risk of 31. And just to show another example, ExxonMobil has an ESG rating of 41.7, which is considered to be severe risk for ESG issues. Do you notice a pattern? The companies who are involved with production of vehicle fuels are considered to be the most risky relative to ESG, and this is by design. The stated goal of ESG is to decarbonize society. It appears that Blackrock, while not divesting of their energy and fuel-related stock holdings at this time, are still wanting to penalize such companies by increasing their cost of capital, promoting increases in regulation, and just making these companies more expensive to operate in order to create more of an advantage to the companies with better ESG rankings. Is it any wonder then that this ESG agenda is a significant cause of inflation increases in the United States and Europe? Because energy price increases have the biggest influence on the rate of inflation. However, there's a growing awareness about the excesses associated with ESG and DEI investing being pushed by the large investment banking firms. For example, in May of this year, Governor DeSantis of Florida signed into law a ban on state officials investing public money into ESG goals and to also ban ESG bond sales. Many consumers are electing to sell their stocks or boycott the products of ESG-driven corporations as a form of protest. Larry Fink of Blackrock has not issued his annual letter for this year to CEOs and has been crying about the growing backlash against the ESG and DEI criteria.
Let's be clear, the narrative is ugly. The narrative is creating this huge polarization. If you really read the CEO letters that I've written in the past, I talk about a transition has to always be fair and just.
I wonder if he thinks that the CEO and board of directors whose jobs he's threatening, or individual investors who's been effectively sidelined from influencing company behavior, view his agenda as personal.
You know, seeing trucks with a picture of me standing next to some other people that are deified.
Notice that he meant to say demonize and instead deified, which means he must really think he is a god. This is speculation on my part, but given that BlackRock has gotten so many companies to go along with their ESG agenda, how much longer do you think it'll be before an individual will have their personal ESG score assigned by some third party, just as the credit bureaus do today? If that happens, people may find themselves unable to secure a car loan unless it's for an EV, as just one example of a myriad of other controls on the population they may try and exercise. Or worse yet, you could be expected to file an environmental tax return that documents how much CO2 was generated by your household during the previous year. You'd have to document how many vehicle miles that you drove, which you're moving towards anyway in lieu of gasoline tax, how many miles you flew in an aircraft, etc. The government will get this data one way or another by buying it from companies such as Google. I use Google Maps a lot, never thought much about my location settings on my phone until Google sent me an email that detailed the date, distance, and type of trip, whether it was by air, motorcycle, car, or walking for the previous month. Apparently, Google has an algorithm that uses your phone's accelerometer to recognize whether you're driving a car or riding a motorcycle. Have you noticed similar tracking applications on your phone? Do you use them? If environmental tax returns become mandatory, the government may give you an allowance for CO2 emissions such as 16 tons per person per year, which is the current personal average for people in the United States. For any computed emissions over this amount, you'd have to pay a tax that would be used to buy carbon offset credits. This would be a dystopian nightmare scenario that I could totally see happening at some point if the current ESG trajectory does not change and change soon. After all, there was a time in the United States when there was no such thing as personal income tax. So what do you think? Do you think companies such as Harley Davidson are being smart and adapting to the new business climate? Or do you think they need to show more leadership and be focused more on the bottom line than pleasing BlackRock? Please leave a comment or share this video with a friend. If you're not already a subscriber, please consider becoming one. Thanks very much.